All right, so taking a look at stocks, at the moment there's a lot of indexes and sectors that are pretty elevated. A lot of people are calling for a crash, and I agree there could be a correction sometime soon, um, but it could continue like this also for some time. So I want to discuss some strategies to both maintain some of your profits, but also scale back on some risks if a pullback were to happen. So this is the ETF for the Russell 2000. When a correction happens in a situation like this, it'll be pretty extreme. Massive runs like this, it's gone from 150 to 200, 33% gain in the last 2 months. Seeing a 10% drop on this within a matter of days, it wouldn't be out of the question. So seeing this come down 20 points, come down to test this 50-day moving average, that would be fine. Even a little bit further and going 50% of this move that we've seen since the beginning of November, I wouldn't think that's out of the question, and I would still be bullish depending on what happens after that. So, what I would say is a good situation is to use these moving averages as your stops. Um, the 5 day is a little bit close, it gets hit just about every few days, but you can make pieces of your position at each of these moving averages, or pick levels that you think make sense. What I've seen traders have trouble with sometimes is where do you pick those stops, or if it comes down for a day and comes back up, people get FOMO and feel like they missed out on something. So just know if this were to come down and trigger your worst case scenario, know how much of your gains you're going to be locking in. Try to hold on longer, but in situations like this, hindsight is always a killer. So once it happens, you're going to be kicking yourself because say this were to come down within a matter of days, it's going to erase all the way back to before Thanksgiving, if it were to have a significant correction, which is very possible after a move like this. So be cautious. I'm still bullish here, but a lot of these indicators seem to be diverging. The MACD and the RSI have been elevated for some time. I think that there is room for some correction here before we get another leg higher in IWM, or some other indexes that I've mentioned in the past, like semiconductors. And I'll take a look quickly at semiconductors specifically. So semiconductors, they've seen another similar move, 20+% right here, and recently it's been diverging a little bit. I've said that semiconductors are leading, and I think they could be foretelling, a little bit of a correction. I still think the move is higher right now. The market in general is responding positively to negative news. The most recent was Alibaba, took a big hit, but there's a lot of news out there on antitrust and things coming in that are negative for big tech, but that's not having the effect that it would if we were at the top of a bubble and this is starting to collapse. So I do think that this is all still bullish. This all just seems like a regular correction, and I think the next move up in SOX and also in QQQ, the Nasdaq ETF, which looks pretty similar. I think the next move higher is there. If we look at the weekly version, we've seen a massive, massive run. This was a correction, but we could continue to see this move higher. This is that long-term trend line that I've referred to multiple times. Something that's, not going to be an exact indicator, but it looks like if you draw a parallel line here, that we're now reaching the top end of that. I think there is a little bit of consolidation that could happen here, but looking at this weekly trend, there's nothing here to make you think that the tech sector is in trouble. And I think tech and semiconductors are leading, will continue to lead. And I think after a little bit of a correction in the next month or so, who knows when it will happen exactly, it could just keep going higher and higher before a correction happens. So I'm not saying that a correction is imminent, but be prepared for something. Make sure you lock in your gains. In a bubble situation, you never know if this will actually be the top, so you have to plan accordingly. And one big mistake that traders always make is when you have a big move like this, they look at the exact bottom, and in the past, they look at the exact tops thinking, oh, I could have made all of this money, especially in a leveraged ETF. How much would that have been? Oh, I'm kicking myself. But in real time, especially in a situation like now, you don't want to be in a triple leveraged ETF, if this were to come down, say Nasdaq comes down 10%, that's 30% in QQQ. So you don't want to take those big hits. You want to scale out. You want to make sure you keep some of your profits, and you want to, keep moving your account forward and make sure that you're protecting your risk. Um, as I said, I don't think this is the end of the bubble. I think some other big news events recently, Apple is in the news about its potential electric vehicle, which, I think that's always been in the news, but it's the type of news event that pushed Apple higher. It's already like the leading mega cap stock, and I think it's just showing that this bubble in the market is ready to continue. That there is more optimism about the future. There's more price appreciation on news like this. It's not something that's majorly negative. So stay bullish, but also recognize when there could be a pullback coming soon.